Joining us right now, first on CNBC interview is BlackRock CEO Larry Fink, as this news is just crossing the tape. Good morning to you.
Good morning, Andrew. Happy New Year.
Happy New Year
to Becky and to Joe.
Let's talk about what's happening here. There has been speculation for months that there would be a major transaction in the future of BlackRock.
Yes.
A lot of people had speculated you would buy a private equity firm. This is a very different deal. You're sort of zigging where others may have been zagging.
Yes.
This is going to make you probably one of, if not the largest infrastructure investors in the world.
It'll put us in the top few. Well, thank you. Let me be clear. We were not looking at any private equity firms. We believe the future in the private markets is going to be infrastructure. As you think about BlackRock, over 65% of our clients are retirement assets. What can be a better asset than long duration assets, high coupon, inflation protected, and then you overlay the needs of governments and companies. I've been long advocating that deficits matter, and the future of governments funding their deficits on their own balance sheet is going to become more and more difficult. And we're in conversation with many governments of doing more public-private type of transactions. We are seeing more and more corporations, instead of selling divisions, they're selling blocks of assets, sometimes 100%, sometimes 50%, and going into partnership as they build out their infrastructure. We all know the need of recalibrating our power grid as we digitize everything. We all know that more and more countries are focusing on energy independence, and some of them are focused on decarbonization. All across these investments, we're talking trillions of dollars. And so we believe the big macro trend in the future is going to be much heavier reliance on private capital, retirement assets, to co-invest with companies and governments in infrastructure. We have had a long relationship with GIP. Bio, the founder, and I have been.
Bio Ogunlesi, who you knew from the First Boston days.
We were part of the First Boston diaspora.
Right.
We all left First Boston. We were partners together at First Boston. We've known each other. And this came together really rather quickly. We had a dinner together in September, and we saw the merits of it. We had our key partners together in October, and we moved very rapidly.
I should mention, Bio Ogunlesi has been the lead director at Goldman Sachs.
Yes.
And he's going to be stepping down as part of this, from that role.
So at the time of closing, and right after closing, Bio will be joining BlackRock's board, and at the same time, he will be standing down from the Goldman Sachs board. He's been the lead director, but he's been on the Goldman Sachs board now for, I think, approximately 12 years. And I know he's sad to leave a great firm, but I think he's very happy to be part of his new firm.
How does this change BlackRock? There was a transformational deal you did with BGI, brought in iShares years ago. That was a transformational transaction.
Yes.
You have put this, from what I was reading, in that same kind of bucket, that same kind of context.
Well, I would put it in the same context when we bought BGI, and iShares was part of it. iShares had $290 billion. Today, iShares is $3.5 trillion. These are just long-term trends that we see, long-term trends in how we see the markets are going to evolve. Much of this, we've made a fundamental belief that the world's capital markets, and this is very good for CNBC, that the world's capital markets are going to become a larger and larger component of economic activity across countries, across the globe. And as I said, if we are going to really elevate our infrastructure as a world, and the need for stronger, better airports, power grids, infrastructure as an asset class must grow, and we believe that we are seeing that. And so we are making a large statement that we believe in the private markets, the future growth in infrastructure is going to be faster than almost any other.
And the bet that you can grow this business, I imagine, by bringing on all the investors who've historically backed you before to put you in a place to compete against the Brookfields of the world.
Our investors already have been notified. They are really excited about this transaction. They see the merits. Combine BlackRock's infrastructure team and the GIP team, we will now have over $150 billion in infrastructure. And we see more and more opportunity. We're working right now with 2 or 3 major companies that are looking to restructure themselves. And we're talking $4 or $5 billion of equity needed to do these infrastructure deals. We're in conversation with the government right now that they're looking to transform some of their power grids. And so all of these things are requiring not a few $100 million, but a few $1 billion. So the need is going to be greater, and the power of GIP and BlackRock really allows us to be in the front of the pack.
How should investors think about this morning in terms of alternatives? How big a piece or small piece on a relative basis this is going to be to your overall earnings picture in the future? What kind of multiple they want to apply to this kind of business relative to the iShares business? It's a complicated picture.
Well, it doubles our fee-related revenues related to our private markets. It's going to put us over $1.5 billion, which is a big block I mean, it's still small to an $18+ billion revenue platform, but it really is giving us a larger engine. If you add what we're doing now in iShares crossed over $1.5 billion in revenues too. So it is these platforms that really, in my mind, identify the strength of BlackRock, that we're able to bring the totality of investment ideas with investment technology, and this gives us a much bigger conversation beyond public securities, public equity, public debt, investment technology, the utilization of ETFs across all the spectrum, and then now being a large player in the infrastructure private markets business. Right.